extraordinary returns follow extraordinary discipline in buying, holding, and selling. It's not what you do randomly that produces high returns, it's what you do consistently. There are two common traits for a successful investor. One, they are extremely disciplined. Two, they understand the downside of investments. One of the biggest mistakes and the wrong reasons to sell an investment is boredom. The hardest part of getting multi high returns is having the patience and conviction to hold an asset through multi years of underperformance. Successful investors again can disconnect emotions from investments and also distinguish business performance versus portfolio performance. So you need to have the right mental model and framework to sell an investment. And according to me, there can possibly be four reasons for you to sell an investment. The first reason why you should sell a stock or an investment is when the story changes. The moment you start spotting some cracks in your investment thesis, you should sell or someone else will, thereby giving you lower prices. So, what actually constitutes this story changing? It can be a judgmental issue. Your advisor thought the government is spending so much on a sector or a segment, thereby benefiting a certain stocks, and that really didn't work out. It can also be because there has been a timeline that is getting pushed every now and then. And when it comes to stock, there is a promoter who's doing a transformational acquisition by diluting his own stake. Why will a promoter do that? These are warning signs. So it is absolutely okay to love your investment thesis, but please be prepared to divorce quickly. So when the facts and the story changes, please don't let your ego come in the way of selling. The second reason why you will sell a stock is when you find something better. While evaluating new positions or new opportunities, you're constantly evaluating them against what you already own. Most of the times, your portfolio will have the best investment ideas and you know them. But it makes sense to keep a close tab on what you own. To replace an existing stock, your new opportunity should give you considerable upside, and by keeping this hurdle rate very high, eventually you will find an idea that is so compelling that you will have to sell an existing position to buy a new idea. Point number 3, sell at the first sign of management's incompetence or unethical behavior. This is a crucial point. Management forms the head or the brain of a company. The operations like sales, marketing, distribution, product, services, they all form the body. If the head is deaf, dumb, and speechless, the body is useless. Life is too short to be investing in companies where the management is irrational, not trustworthy, and unethical. The biggest test to a management's rationality is a decision on how to use cash. If you find anything fishy there, exit. The fourth and the most important point, sell when the segment or the stock gets overvalued. Holding on to your investments and cutting your losses is one of the key traits of a successful investor. We are all cognizant of the fact. But what really happens over a period of time is that the reality and the expectation becomes way too imbalanced. Many a times, if a stock runs up significantly in a short period of time, it does correct by a good 50%. At this point in time, it is okay to sell them, to buy back later if the valuation becomes cheaper and your investment thesis still holds good. There will be some instances when the best checklists and the mental models will not stop you from making wrong decisions. Warren Buffett famously says a checklist is no substitute to thinking. The same applies to these four principles of selling too. These are more like guardrails that helps you to stay on track for financial freedom. I'm never going to be right 100% of the times while I sell a stock, just like the way when I pick a stock. The overriding theme is when you sell, you start rationalizing your portfolio and you can be a successful investor, not just by the gains that you make, but by also the losses that you don't make. I really hope you like this video. Please do subscribe and have a great day, everyone.